Did you listen to me yesterday? We are pumping up from yesterday. A range of memes are pumping up currently, but this is still very cautious, very slow movements, but it goes slowly first and then it starts to skyrocket without you actually having the option to enter at nice prices. We are still in the bottom range for a range of assets out there. This is the time to buy. One more time. I'm 100% sure that $49,000 was the bottom. I'm 100% sure that we are going to $61,000 currently, and we will see what will be happening right after based on the charts and based on the situation, on the sentiment on the market as well. Today we will talk about traders versus investors. We will talk about the exact time frame when investors should actually start to outperform traders based on the previous data. And I will also share the time frame that you still might have to accumulate your assets, a very short time frame, in order to prepare for the bull run and prepare your portfolio for the bull run as well. Without further ado, let's actually start. As you can see, I finally shaved. Very nice. Very nice. Let's figure out if you actually listened to me yesterday, what I was saying yesterday. What's next for the crypto market? Of course, we're dropping 20% more, so you will have your option to actually enter. Fear being greedy at the bottoms of the cycle. Today, I will actually prove to you that we are at the bottom currently. Today, I will push you and I will scream at you, buy into your assets. Buy and hold into your assets. You will get rewarded for buying currently and holding further into the cycle. Was right? 100%. If you were buying assets yesterday, you should be up 20-30% today as well. We have things like selfie pump and mini, a bunch of selfie memes, some Tron memes, also sharing some movement, some Ethereum memes as well. I'm not speaking about other assets out there. But what's interesting is that the thing that I want to focus in today's video is performance, traders versus investors, right? We need to check out the historical levels, historical time frames on where the traders used to actually outperform investors and what was the best time frames to actually be either in traders camp or in investors camp, in order to try to figure out what is the best type of identity you should actually be wearing currently at this stage. Despite this, investors over long enough time frame, they outperform traders 100%. So something I wanted to share. Following the current bear cycle, right? We pretty much started dumping since November 2021. So you might say that this was the start of the bear cycle right here, right? Here, probably traders were doing very well. They were just shorting the market, right? I won't say that traders were doing very well. I would say that inverse investors were doing very well. They just understood, all right, it's not a bull market anymore, it's a bear market, and people who were able to start shorting from these levels and just held the short through all this time frame till the bottom, they've done very well. However, this situation is quite interesting. These 7 months of movement, 210 days, 209, right? Since June of 2022 till the January of 2023. I was through all of this movement and I remember it very nicely. I was actually buying some assets right here during these bottoms as well. Unfortunately, I was buying the tokens of the previous cycle that did not yield enough in comparison to other tokens, right? In this area, in this time frame, people, definitely it was the area for traders. Definitely traders outperform investors heavily during this area. So let us actually try to create a chart, right? So we would create a chart of traders versus investors, right? And we'll create performance chart right here. So essentially at this level, we would say that maybe it's a 0, right? Because here traders, like default traders, I won't say that they were doing like they were making a lot of money. Probably inverse investors were making a lot of money. People who were just shorting the market from there, right? So we would start at 0. Since this level, what we're seeing is that essentially traders heavily outperform investors, right? In each sideways action, and they were moving heavily up till this stage of the January 2023. What happened there? We finally broke through the range right here from $16,000 back to 20K up. And this was the time where a bunch of shorts were liquidated. I remember the sentiment right here. I was liquidated for quite a nice sum of money here because I was trying to short the market as everyone else as well. And essentially this was the time where investors started to outperform traders as well. Well, there were some tokens like Altura, like Caspa. I do remember that Aptos did very nice in a short amount of time frame. So investors essentially started to outperform. But I would say it mostly was like a sideways action, right? Until we're essentially sour at this level, where investors started to heavily outperform traders. Can you imagine what is the amount of people that actually were buying assets right here, were acquiring assets right here, and they sold like right here, sold right here, sold right here, and they did not catch the bulk of this move because they were scared or because they decided that it's a trader's market and bull run is not common and things like that. And what happened since this $25,000 level is that investors started to heavily outperform traders. So our chart is essentially going down just because of the reason that investors line, we have it at the bottom, right? So this is the period of active outperformance by investors. They were heavily outperforming traders right here. The main reason for that is because BTC was pumping from 25k to 70k. Imagine how many people that were trying to flip, they sold here, they sold here, they sold right here after the approval of BTC ETF. They thought that, oh, nothing is happening, we won't be moving higher, I would rather sell because we're still in the bear market, halving is still in some time from now, so it's probably still a bear market and nothing's happening, right? So this is the time, like, it's heavy outperformance of investors by traders. I would even want to put it even right here, just to show that this outperformance was so heavy, so enormous amounts of money were made by people who were actually investing instead of trading. And if you're opening a long leverage position on some asset, but you're holding it for 3 to 4 months, in my eyes, you're still an investor. You're not a trader, right? Traders are the guys that are looking to take short-term moves. They buy, sell, flip the asset. They're trying to swing trade and things like that. So it's a bit of a different thing. And what happened right after is that we actually entered our range. We entered our 6 months range that we are in currently at these levels, right? And what started to happen is that traders essentially started to outperform investors heavily. Probably there were some inverse investors that shorted certain assets. Mostly, I do think that people that made a bunch of money, they were shorting some overly exposed assets like meme coins, maybe some alts that pumped like crazy. But speaking of something like SUI, it essentially went from $2 back to 0.4. So yeah, essentially it's a 5x short. If you're doing it with leverage since the top, we probably made a nice amount of money during this range as well. But if you're shorting for a longer time, I would call you an inverse investor. And traders here, they were trading assets, trading memes, they were doing very nicely. So they were outperforming during this time. They were outperforming very nicely. And what I would want to focus on the time frames, because we see that the previous range where traders were outperforming investors heavily was 210 days, right? And then for 420 days, it's quite interesting that 420 days is actually 2 times the range. So you might say that maybe somewhere in the middle, it still was traders market right here, because it was sideways action, right? And here it's clear investors market. And currently we are in traders market again. Inverse investors who are shorting the market long term, right? And traders market as well. People that trade, they're capitalizing heavily in this sideways price action if they essentially know what are they doing, right? And following this initial time frame of 210 days, which is very interesting. Don't neglect time frames in crypto. I was talking to multiple 7-figure whales at the peak of this 16k market, and they said that they are going to buy alts closer to the end of 2024, strictly based on time estimates. Nothing else. They said, we did not care about the price. We just care about the time estimates. And currently, we are closer to the end of 2024, right? And bunch of alts, they are back to the accumulation price levels. The similar price levels as they saw in August of 2023 when BTC was at $29,000. It's just crazy. It's crazy to see how well this thing actually works. So if we would essentially increase our range, right, 210 days, we can say that the period where traders actually outperform investors should end up on 8th of October. It's quite interesting because it would be 2 weeks after the first interest rate cuts on the marketplace. I would say that during this time, we should get higher in our range, right? Like closer to the breakout in terms of our range. I'm quite confident that short term, we should be seeing the 61K BTC at these levels, right? Following the liquidation heat map as well, like the amount of shorts and the amount of longs that opened at this stage, we can definitely see that there is a bunch of liquidity in terms of longs, and we do have a lot of liquidity in terms of shorts as well. It just does not show it here, but at like 60K levels, we have a bunch of liquidity for shorts out there, right? I do think that following this long liquidity, we might revisit 55K, but after that, I do think that we should be going straight up to 61K at least. And following this time frame, this is actually the time where investors should stop underperforming traders and they should start to outperform traders for the next 210 days. It's just a time frame estimate. And our chart would essentially look like this. We will go a bit higher in terms of the performance of traders, of investors, right? We will face this resistance. We probably won't be able to break through it because it would mean that the market would just go sideways for eternity, right? It's just not that interesting, right? And after that, investors should again start to heavily outperform traders. And we definitely do have some narrative supporting that. We have the US election. We are at the edge of 10 to 12, according to the projections, consecutive months of interest rates cuts, with money becoming cheaper and cheaper and cheaper and cheaper, and markets, they are front running. Yeah, currently at this stage, maybe it's not like that obvious. I do think that like something is just suppressing the market, creating this sentiment just to be able, just to have a bit more time for this accumulation at this stage, right? But I do think that 1 month from here is the time that you actually have left. And don't get me wrong, I think the prices that we're seeing currently, these are the prices that with a highly chance of happening, we won't be seeing moving further as well for a lot of time. Because even with us essentially going higher from here, what will be happening is that market will still be going higher. And BTC will be going to 55, 61, like 63, 65 maybe. But alts and memes, they will be surging up much higher. They won't give you the prices that are on the marketplace currently. This is a very, very important thing to understand. We might have our weak downs, right? So we might peak to 55K because we have a bunch of liquidity in terms of loans right here at this stage at 56K, right? A bunch of liquidity. But will it actually weak down a lot of memes and alts out there? I don't think so. This is the actual time to be accumulating through the current situation till essentially 8th of October. I do think that this thing will actually play out, and you can see it on the chart of traders and investors. Traders were outperforming investors for quite some time already, and this 210 days period is actually coming to the end, and it should be followed up by investors outperforming the traders. And what's interesting is that the time frame of investors outperforming the traders usually is quite short, because this is essentially how the market works. We get this we get this long-term sideways chop price action, right? When people who want to have to get 20 and 30 access are acquiring assets from people that don't have patience, that want just to get 2 to 3x and then like go into stables and try to flip some things, some stupid bullshit, right? Acquiring the assets, and it definitely requires time. And then we have explosive move ups, like we essentially had here from 25K to 70K. It all happened in 140 days. I do believe something like this will be happening with us essentially moving closer to this range. And what's interesting is that timing wise, it's also a very, very nice thing. At the start of October and November are historically the most bullish months for crypto. I do believe we're in this final range of accumulation, but don't get me wrong, with each day, I do believe what we would be seeing with each day is us actually seeing the prices of assets slowly going higher, higher, higher and higher. So the sooner you would actually accumulate, the better would be for you, from my point of view, right? At the same time, you might just create ranges on the assets that you're accumulating and just wait till they will tap the bottom of the ranges and accumulate over time with essentially increments of cash, of capital that you have on your end. I hope this whole thing makes sense. I will continue to scream about this thing until it will become irrelevant. Thank you very much for watching this video. I'll be seeing you tomorrow.